Welcome to this morning's session on FinTech leaders, inspiration for the next generation. And I'd like to introduce our panelists this morning. Can I please call out Boden, the CEO of Starling Bank? Lynn, chairman of Seedrs. Rishi, Khosla, CEO of OakNorth. And Kalifa, vice chairman, Worldpay. Thank you very much, and welcome again. Let me try to set the context for the next 35 minutes for us. Back in 2015, everything was about Silicon Valley's coming. Blockchain's going to be the game changer. Robos are going to replace humans, and it was a death by 1,000 cuts. FinTechs were pure competition. If we fast forward to 2017, we get the headlines of FinTechs figuring out the new normal. Partnerships everywhere, and with banks and FinTechs, you can't live with them, and you can't live without them. And it was all around collaboration. So if we fast forward to 2018, as we're sitting here in March, we can take a look at how innovation has fundamentally not only disrupted, but reshaped how financial services are provisioned, structured, and consumed today. And we can think about how organizations, how they win and compete today are going to be very different than how they compete and win tomorrow, which the impacts are radically changing the business model of our industry. And let me just tee this off. Ann and I had a great conversation, and I'd like to invite Ann to share some of her insights around how disruption is actually happening and changing the business model, and particularly the economics of banking from the lens of a challenger bank.
Thanks, Michael. Good morning, everybody. I'm often asked, Ann, Starling Bank, a new bank, aren't they all the same? And there are lots of them. And what I'd like to talk about a bit is how it's all about business models, how it's not about innovation, but it's all about costs. And it's great because my fellow panelists this morning are part of that story. Ron and I worked together at RBS in the early days when, we were going through a financial crisis and things were going to change, and it sparked off a lot of innovation. And what we have is sort of in terms of Seedrs and OakNorth, were the first generation of people coming to the market with new innovative things. And then we had a whole period of people responding to consumer demand with lots of prepaid propositions that really raised customer expectations and lowered pricing. And in this environment, I see that things are beginning to settle out where we have three different actors in this environment. We have the incumbent banks that are doing a huge amount to collaborate, to find ideas, to sponsor incubators, and understand what's happening in the marketplace. You have a whole range of new innovative products based on other people's banking licenses, creating new products for consumers. But in my sort of opinion, with a very, very difficult challenge in front of them in that they will never actually find a viable revenue model. And then you've got new actors in the marketplace, and there are quite a few of them. It's not just Starling, where we are all about regulation and technology and access to payment systems, and providing a platform for other people in this marketplace. For example, Starling are members of Faster Payments, we're members of SEPA, Step 2 and Target 2, we're members of BACS. We provide infrastructure to the industry. We provide infrastructure to the industry so that FinTechs, other banks and even government connect to payment infrastructure in a very low cost, high availability way. And then we have the fact that we at Starling don't believe in being balance sheet heavy. We believe in being balance sheet light. We're all about providing those services that we're particularly good at. And we have no intention of providing our own mortgages or more balance sheet intensive products. But to provide those services to our customers, we have a marketplace. So that's the little niche that Starling's found itself in, whereby we are providing infrastructure and services and keeping our balance sheet light. You then have other players which are very apt and very skilled at actually using their balance sheet in an innovative way. And then you've got players who are actually working on bringing people together in new ways to crowdfund various propositions. So my response is that we're all very, very different. We all have very, very different business models. I believe that the big banks and many of the people out here in the audience today are very bright, very capable, and their boardrooms are full of people that will ensure that all the things us disruptors are doing will be copied in a very, very structured way to give new, innovative products to customers. But what they won't be able to do is actually match the cost base of people like ourselves. Because even across this group, we're talking about hundreds of people being employed, not the tens of thousands. So my summary really is, this is going to be a battle of the cost base, not a battle about innovation. We have to thank the new innovative fintechs for coming to the marketplace, lowering prices, and increasing the customer demand for innovative services. But that is not where the battle is going to be fought. The battle is going to be fought between the people with new business models providing scalable infrastructure and the incumbents that are still sitting on balance sheets and still sitting on cost bases that were relevant 20 years ago, but not relevant today.
Thanks, Anne. Your comment on cost base is so real, and it's really one of the foundations of how organizations are going to compete and win differently. If I shift over to Rishi of OakNorth, can I ask you to set up kind of your thoughts around the delicate balance of competition and collaboration with the ecosystem? I know primarily that you've built the organization from ground up using cloud, analytics, machine learning, and you compete a very different way in terms of speed and velocity in a very complex kind of environment. But you're also in the collaboration space with Acorn in terms of enabling some of these infrastructure and services outside of your immediate geography. Can you share with us in the group here that balance between collaboration and competition?
Sure. I think the place where I'll start with is actually defining the problem. I think with our own experience building our previous business, we experienced on how challenging it was to get debt finance for a growth business. And through that, it actually triggered a lot of thoughts in terms of actually, is this problem a UK-specific problem? Is it a problem which is specific to our own business? Or is it something which is a larger problem across many markets? And having figured that it is a larger problem across many markets, we actually decided to set up our own operation where we're competing against the market or the providers of capital within the UK with OakNorth Bank. We launched that in September 2014. Right now, today, we're at 4 times the original business plan, having had no defaults within our book over that period, and in our view, competing very effectively in a space which gets overlooked and underserved by the major banks. Within actually performing and executing the strategy around that, what we've experienced is just a massive opportunity across many other markets as we had banks from many markets come and visit us and start discussing in terms of what was our model, how were we actually executing against it, how were we solving this problem. And that's what triggered us to start thinking about the collaborative element as we look to expand. Today, with our data technology platform, we're speaking to lenders across many, many markets, from Canada, the US, France, Germany, Austria, the Nordics, Indonesia, Singapore, Australia, etc. And there's no way we could do that at that type of velocity and speed if we were trying to compete in each of those markets independently as a balance sheet lender. So for us, the combination between competing and collaborating in different markets has been so important to actually executing against what we're against the problem set that we set ourselves up for. Within that, I'd also actually extend that to our approach on the tech stack. Machine learning, which I'm sure is something which will come up almost in every single talk here. Our view is the best algorithms are all open source, and fundamentally it's all about taking them and training models in the appropriate way against your application. The fact that they're open source just shows the way that, again, technology moves continually to actually collaborate to get the best outcomes for all. And within that, we've also partnered with other fintech firms through our journey of setting up OakNorth in the UK, which again, at different stages of our evolution have been amazingly helpful in innovation and as well as speed to market, which again, in our view, are the critical points when you're looking to establish and compete in the market.
Thank you. Any comments from the panelists?
Maybe just add something that you said, Rishi. I think collaboration and cooperation is actually quite a constant challenge for most organizations. When do you decide to collaborate? When do you compete? The way I think about it is that collaboration tends to be at the back end, in other words, in the infrastructure. You tend to have organizations such as yours where you will collaborate simply because we, as a payments provider at Worldpay, don't have the same capabilities that you or others would have. So if I think about an example, we are a payments provider around the world, a global merchant services provider. The reality, though, is that we don't do lending. However, our customers need funds to borrow. Banks typically will not have the capacity, the capability, and the merchant will not be seen as creditworthy. We provide our information in the form of data to providers such as you and others, and basically provide that. So it's not sitting on my balance sheet, it's sitting on someone else's balance sheet. A very good example I can think of is February the 14th, there was at Valentine's Day, we had a retailer, a good retailer who'd been with us for many, many years, and they wanted to borrow some money for basically adding stock for Valentine's Day. The bank said no. We provided data around payment history to a third party, collaborated with them, and on the back of that particular retailer had funds available to them in the form of lending. It helped them grow their business. So I think there's many, many models that are around that allow us to kind of do that. But I do think that collaboration is a theme for the future.
And any comments around collaboration?
Yeah, collaboration. People normally think that collaboration is all about a bank collaborating with a FinTech. There's lots of different permutations. We're a bank, but we're a new bank, and we're sort of really into technology. We build our own technology, and we are much more of a tech company than a bank. But we have a marketplace, and in that marketplace, you have lots of companies that are connecting with our customers. Typically, people think that those companies are smaller companies, small fintechs. More than half of those companies are big companies. There are big companies that realize that new ways of actually collaborating and getting at markets and distribution is important. One of our marketplace partner, Yolt, is owned by a big bank. And in that particular scenario, we're new and we're the bank, and they are a big bank and they're the fintech. So don't assume that these organizations are going to come together in traditional ways. We've got big organizations as well as small organizations finding that the fintech movement, the new bank movement, is a very, very effective distribution model, because our cost of customer acquisition is much, much lower in this new environment than the traditional acquisition costs of a big incumbent bank or asset management company.
I like that. I think what we're hearing is when you weave in some of these themes of the marketplace, collaboration, technology, access to data, we're democratizing and allowing access to very different segments. Jeff, I'm going to point to you in terms of, our conversation was all around not just doing things faster and better and lower cost, but the creation of actually brand new markets. Can you describe how Seedrs has positioned itself to actually create access to not only investors, but also capital raisers in segments that traditionally weren't available to them through the traditional banks?
Absolutely. Thanks, Michael. So at Seedrs, we are a marketplace. We're a marketplace for private equity capital. We allow private companies ranging from seed stage all the way up to pre-IPO to raise capital. We allow investors from very small individual investors up to large institutions to invest capital, and our role is to bring them together as a market. We've had a very good run so far. We've been about 5 years in, and in those 5 years, we've gone from nowhere to becoming the most active funder of private companies in the UK. We've pioneered a secondary market for private equity investments and a number of other things. The reason, what's relevant about all of this is that the space we came into didn't really exist before. There were investors, obviously, and there were companies, but there was very, very little in the way of traditional intermediation. And what always strikes me about FinTech or innovative finance is that really it kind of breaks down into, there are three very different sort of buckets of innovative financial businesses. There's sort of what we might call classic FinTech, which is what the term was used, as the term was used when we first started, which was really all about providing the technology that helped underlie existing financial institutions, the technologies that powered banks, that powered hedge funds and others. So that's one bucket. The second are the disruptive models, like Starling, I think, like OakNorth, I think, where you are going into a space, be it banking, be it SME lending, that has existed in the past, and you are doing it better. And I agree with Ann. There's the sort of, faster, cheaper, more customer-friendly element, and there's the cost-based element, and that is competing with, and I think being very effective against existing models. And then the third vertical, or the third space here, is really what we do, which is entering into a market that hadn't existed before. And in some ways, it can be it can sound a little bit less exciting. I mean, disruption is great. It creates conflict. It creates stories of battles. But actually, with very few exceptions, we didn't have any other competitors other than other platforms that emerged to do the same kind of thing that we were doing. And what that's put us in a position of, I think, is being collaborative from day one. We have people throughout the financial services ecosystem, both banks and more established financial services players, but increasingly other fintechs with whom we can work not only because we need their services and hopefully they need what we have to offer, but also because there isn't an inherent clash between us. Actually, there's a tremendous symbiosis. There's a tremendous ability to add value between each other. And it becomes a very sort of natural and harmonious kind of relationship. Now, obviously, it's not all sort of roses quite like that, but it does make for a very, very value additive environment, which is one of the things I find most exciting.
What are some thorns in those roses?
Well, one of the things that still exists, particularly in our sort of area of fintech, which we can call alternative investment or alternative finance, it's highly verticalized today. So there are those of us who focus on equity, and that is what we do. There are the peer-to-peer lenders, doing what you might call debt crowdfunding. There are the invoice finance players. There are a number of individual verticals, and for a host of reasons, it has so far worked very well to be verticalized. And again, across the alternative investment space, the number of people we know who have a Seedrs account to invest in early stage equity, who have a funding circle account for SME lending, and Zopa, rate setter for peer-to-peer lending, market invoice, et cetera, and across the bands. And that's been very good. One of the really interesting things, I think, in the market in the next 5 to 10 years is, does that verticalization stay? And it may well. There's not an inherent need for combination across the different verticals, and I do think we are all very focused on maintaining low-cost base, operating efficiently. We don't have the kind of costs that come from brick-and-mortar operations. But then again, you never know. And if you begin to see more consolidation in the space, if you begin to see more fintech providers trying to essentially replicate what traditional financial services businesses did and serve all aspects of a customer's financial need, well, then you probably wind up in a significantly more competitive environment.
Now, I recently heard this morning someone mention we have unicorn cookies in the building. And in terms of aspirations, the whole unicorn notion, being an innovation festival and a FinTech festival, you got to think about growth and scaling. So I'm going to, last but not least, Ron, our conversation, I mean, it's almost a $30 billion market cap that you're enjoying right now, and you started with 200 employees. Can you share in terms of inspiring the next generation of FinTech leaders? And I do see a lot of ties in the crowd, but I'm assuming there's a lot of FinTech leaders out there. Can you share some of your insights, lessons learned, hacks on how to grow your organization to that level of status?
Yeah, look, I never know what the word unicorn means anymore because it seems to be a unilateral word for anyone that's basically operating with a couple of iPads in Shoreditch who thinks that they're a FinTech company. But the reality, I think, is that it tends to be about organizations. I mean, if I think about Worldpay, you're right, we started with 200 people in Cambridge. We're now 9,000 people. We're $29 billion market cap. That journey has been quite an interesting one simply because it was a business which was bought by a bank, NatWest, which then got merged into Royal Bank of Scotland. It was lost in that bank as well. It was lost there simply because RBS at the time had no capital to invest in a business which had a lot of potential. Payments was something that was done in the back office. I always remember when Alan and I worked together that I was struggling to get any capital invested into Worldpay. It represented about 20%, 25% of the revenues of the division that we were in, and that division represented about 25% of the revenues of the overall group. If I compare that to many of the opportunities that are there in front of us, we then basically got sold to private equity. Bain Capital and Advent International bought the business for about £2 billion, invested about £1.5 billion into it, and then we listed on the stock exchange here in London, which was a great transformation from the small sort of unicorn or idea that was there at the time. Became a $6 billion market cap company. The reason for that growth was centered around certain things. It was driven by access to distribution. I think that's a really key component for any business. As you guys think about what you want to do, you've got to make sure that you know where your next customers are coming from. They may come out of collaboration, they may come out of competition, whatever it is, but you've got to be able to get customers, new customers, through whatever channel. And we've got a direct model, but we've also got indirect sales through partners and others. The other piece, I think, is that you've got to have basically the ability to scale. There's no point in having a business that doesn't get you into a stratosphere where you're either going to be number one or number two. And that's the sort of philosophy that we've always had, which is we want to be number one or number two in our chosen markets and our chosen verticals. And I do think verticalization is an important theme that's just been talked about. So we basically created verticals for airlines, for retail, for travel, for gaming, and for digital content in terms of our e-commerce platform. And that was really, really important to make sure that everything was disciplined around those particular verticals. The third ingredient for us was a technology platform. You know, we are a platform business. I think everyone talks about platforms now, but a platform business basically means that you are building once and using many times. We've invested very heavily in a new shiny box that allows our merchants to access a global stage in terms of payments. And the last piece for me was actually about regulation. You know, the regulator tends to get slammed pretty often. The reality is that regulation's here to stay, and there's no way to get past that. So work with the regulator, and as you work with them, try and help them understand the challenges that you've got. Because those challenges are actually multiplied across the industry, whichever sector or segment you're in. So I think those are the sort of ingredients that we've got in terms of that have made us successful. The final piece I'd say is that, you know, we have to be centered, and we have been centered around customers. It's no point in thinking about us as a payment provider. We're a payment provider that's trying to solve an outcome. And the outcomes that we focused on have been three things. Firstly, to drive and increase sales. Secondly, to drive and reduce cost. And thirdly, to mitigate fraud. If you think about those things, increase sales, reduce cost, and fraud management, all our propositions, every one of our propositions is centered and built around those three things. So increasing sales, that can be simply because of the fact that we've got a global capability where we can basically look at authorization rates or decline rates and try and drive a better outcome. We more or less guarantee, when we look at a competitor's data set for our potential customers, that we can improve acceptance rates. And that comes out of the scale and the distribution point that I made earlier. The cost piece comes out of, again, a global capability to direct the traffic in different jurisdictions to ensure that you get the lowest wholesale cost. And third, in terms of fraud, you just got to make sure that your ladders are taller than the guys who are building other ladders that are trying to get into the moat. So that's really the sort of simplicity and the philosophy that we've had to help our business grow.
Ron and I were talking before we came onto the stage about the fact that we've both had a long career in this business, and it's only now that the business we're in is so attractive. 10 years ago, this industry wasn't seen as being where you had great careers and you could change people's lives. Ron and I took different sort of routes to where we are today on this stage, in that one was an exit from a big company, a sale to private equity. I decided to quit my job and start a new bank. But I think the thing we have in common is you don't win in this industry. You don't give real value back to consumers and businesses unless you achieve scale. We can only give value if we do things at scale, and you can't do all the things for all the people all the time. You have to really focus. And that is why you've got an industry at the moment that is actually segmenting into people who focus on certain things in order to make a real difference. You've got people that are balance sheet focused, you've got people that are technology focused. We at Starling all about technology regulation and payment schemes and providing those platforms and marketplaces. But not everybody is going to come up with the same sort of plan for scale and should achieve profitability. I think the FinTech industry is at the start of the next era. We've had the innovation, we've had the new ideas, we've had people giving customers what they want in terms of new functions. Now we have to achieve scale. Now we have to achieve profitability, because by achieving profitability and a sustainable revenue model, we'll then get sustainable change that'll give real value to consumers and businesses for the next 10 years.
Thank you. What I think I heard is one way to define commercial value is to be able to grow, but also operate at scale with these different business models. And a large portion of that is acquiring customers. Question to the panelists, how important is that distribution channel and the different models? Ron?
Look, it's critical for us. Basically, as I said earlier, we came out of a bank. So we had a direct correlation and a corresponding kind of route to get customers. However, that wasn't enough. When we first divested from RBS, 40% of all our business was coming from RBS. Now, it's about 15%. And the reason for that is that we've had to build other channels. We've got a direct sales force. We've got direct telephony activities. We've got direct e-com activities. You've got to make sure that you build for the future. The reliance on one partner is difficult. The other side of it is that if you're an infrastructure provider, which we're trying to be for many, many banks, and some of you here in the audience, we've got to find ways to create a differentiation so that one organization gets a slightly different product than the other. Otherwise, you're not able to sell to your customers. So finding a way to do some differentiation in terms of customers is actually key. So for me, it's got to be the route for success in terms of distribution.
Jeff?
I agree with that 100%, and I think one of the themes that sort of has come up a couple of times briefly and underlies so much in financial innovation is democratization, is the ability to use these new technologies to serve more people who, in more ways than ever could before. I'm minded by the fact that we're under the watchful eye of Chatham, the great commoner, sort of fitting for a group of people talking about the democratization of this area. However, none of that means anything if you can't get it out to everybody. It becomes very, very easy for those of us who sit in rooms like this, who are all very aware of the latest financial innovations, to think that nobody uses a passbook to go to a bank branch anymore, or nobody would ever need some of the traditional, or thinks of in terms of using financial services in traditional ways. That's obviously not true. We're still talking about 1%, 2% market penetration, if that. And one of the keys in coming years to reach the sort of scale Anne talks about, and I agree with her 100% on the importance of scale, it is going to be about getting distribution deeper and deeper into the market.
Let me just keep to the theme of this particular session here, and it's about inspiration for the next generation of FinTech leaders. Just to conclude this session, I'm going to ask our panelists to give a short, sharp piece of advice to these FinTech leaders. Who would like to start? Rishi.
So I think that, in my personal view, I don't think we've innovated anywhere near as much as the potential allows us to, so I don't think innovation's done. I do think innovation and scaling is critically important. And with that, I mean, obviously you've heard about distribution channel and cost base, both critically important, but I still go back to where I started, which is, what's the problem that you're looking to solve? I still hear a lot of fintechs which are saying they're doing ABC, or they're focused on this part of the technology or the value chain, etc. But fundamentally, you need to have a real problem which you're looking to solve, and that problem to be a scale problem to be able to build a scale business to solve it.
Ron.
Yeah, look, I completely agree with that. I think the other thing I would add is basically businesses are built by leaders who are curious. You know, you've got to be able to look around corners. You've got to be able to find the solutions to the problems that exist. I think that's the first thing. The second is that you've got to have some courage, because there's an awful lot of good ideas that are out there, and there's an awful lot of capital and liquidity in the market. Try and find ways to bring that together with the right funding models. And the last one is that be resilient. You know, you're going to get knockbacks almost daily. Whatever you do, someone's going to say no. And just make sure that you keep pushing the boundaries of your business model, your ideas, your vision, to make sure that you're successful.
Jeff?
You know, I think one of the themes that I come back to a lot is that technology doesn't change the underlying realities of finance. It makes it more efficient, more accessible, faster, cheaper, et cetera. But it's not alchemy. You know, I think 15 years ago, had you had a panel about innovative finance, you might very well have been talking about this great idea of taking a bunch of C-rated mortgages and packaging them together and turning them into an A-rated mortgage. That seemed rather like innovation at the time, but we all know how it worked out. And we see it to this day, too. I think in many ways, you know, in many sectors, what technology is able to do to the financial world is make economic reality work better for more people. But it doesn't necessarily change the underlying, the baseline of how economics works, of how finance works. And that, I would leave with that thought.
Anne.
I've talked a lot about scale, and my advice to the group of people who are in the FinTech, and some say in the FinTech bubble, we actually have to get out there. We have to talk to more people in more places that don't talk about FinTech every day. Because we have to spread the message in order for this industry to be viable, for it to be scaled. And that means that we need to talk to men and women in the same way about money. And I'd like you all to sort of look at hashtag #MakeMoneyEqual and see what we can do to make financial advice fairer for men and women.
Money is quite emotional, isn't it?
Yes.
Anne, Jeff, Rishi, Ron, thank you very much for sharing your insights this morning.